We start with the heavyweight, that is ExxonMobil. It's the world's largest petrochemicals company.
Yeah, so as we want to do these days, we like talking about these global conversations, and we put in some of the world leading companies just so you can get a sense of how big they are and how small, perhaps relative to those, some of the other local players are.
And it's all about context at the end of the day.
Indeed. So ExxonMobil used to be the world's most valuable company. As we know, Apple has since far surpassed it. But it still has a market cap of $367 billion. It is based in Irving in Texas, which is its headquarters, but we'll talk a little bit about its history in a minute.
PE ratio here of 13.2 and a dividend yield of 3.3%.
So those are not particularly generous or high numbers. In other words, trades on a fairly modest PE. Remember that this is the stepchild, you could call it, of the old Standard Oil founded by John Rockefeller in the 1870s. In 1911, it gets broken up by the US administration because of monopoly concerns, and then it spawns all the little babies, and then these two, Exxon and Mobil, get put back together again. So it is the world's largest player. It's got operations all over the place.
Does being the largest player necessarily translate into a good investment decision?
Well, that's interesting because you can see there from the chart it hasn't done particularly well. Yes, it's kind of sagged there from around 110 to its current level of 86.
But that will be in line with the broader underlying oil environment.
Look, they made one very important tactical move back in 2010, which did result in a bit of an uptick, and that was to get into the US shale business by a purchase of a business called XTO at that time. They used to have assets in the Middle East and elsewhere. They've had joint ventures with the Russians. They got flushed out of Saudi when Saudi basically nationalized all of those fields, and that brought Saudi Aramco. To put us in context, they produce about 3 to 4% of world's current oil production. So that's about 3.5 to 4 billion barrels equivalent per day.
Given the context that you set around this discussion from the beginning, I'm betting that you're not going to think that this company is hot.
One of the big challenges and one of the things that underpins its rating in the market is that because they're so significant as a producer, they have enormous work to do to go on replacing their oil reserves on an ongoing basis. And I think that is the challenge. It's difficult for the management under Rex Tillerson to decide just as much how to spend on building new oil fields when you're that large.
So
because the market
better,
is looking for...
Big is not better in this context.
Look, you can tell from the rating, a 13 PE is a fair bit lower than the ordinary run-of-the-mill US type stock. With that scale, with those profits, those revenues, you'd think they would be doing better. But I think it's a reflection of the dis-ease that people feel with regard to the oil market.
Hot or not on ExxonMobil?
Not going to go with hot on current ratings. Certainly a very competent and interesting company. But for me, the overall sense is caution with regard to the oil market.
So ExxonMobil, it is a not hot from Paul.